All of a sudden, everyone's calling for a crash. All I see is a perfect pullback into a higher low. The volume's low, the fear is back, and Bitcoin is weirdly pulling into levels of support. But here's the truth. These dips are often there to launch the next leg up. Markets go up, they go down. Funny enough, it's looking relatively good for a really good entry point right now. Like this video if you're positioning yourself for this next breakout, and let me know in the comments, are you waiting to buy lower, or have you got your entries mapped out? Now we're going to talk a little bit about the Def Cross setup. It's not quite bearish, and Ben Cohen's talked about this quite a lot. The Bitcoin asset, so to speak, and the fickle-mindedness of cryptocurrency is, oh my god, Def Cross, they tend to dump into it. It's a bit of a pattern. It's happened in 2019, it's happened in 2021, 2023, it's happened in 2024 technically as well. And that's the thing, we've kind of already pre-dumped it based off news, based off speculation, based off fear, whatever you want to know it as. And when you combine it with all, obviously, stuff like this, and remember with technical analysis, there's 500 ways to skin a cat, literally. There's a million ways. And everyone will perceive data. The thing is now, the 50 moving average, which is the beautiful little white line, so to speak, needs to hold at this point. We also have to think of the 200 moving average as well here, which is technically just sitting there and at a level of $87,000, $88,000. It's not terrible, but ultimately we've pushed our way massively out of it. As you know, don't tend to use simple moving averages, but as a good observation, it's more of a situation where the structure is intact here. This isn't a top, it's just a retest in my opinion, and that green level in terms of that range is holding nicely currently. We've had a change of character, as you know, in my previous videos. It's a key level. So yeah, we just need to hold this level. I think if we go below $84,000 from this point, it would hurt. And that's the bearish side of it, in my opinion. Now, in terms of key levels around Bitcoin currently, we are at, in my opinion, a very key level. We are back into this range, as I've kind of just alluded to it and in my previous video yesterday. Make sure you subscribe so you don't miss out, by the way. We're at a really big area where it could well be untapped liquidity for bulls to jump in, just going to say, and stick around. I'm going to talk about volume. I'm going to talk about, obviously, other bits and pieces. The prices have to hold here, and we'll talk about dominance. We'll talk about altcoins as well, because I think this is a really, really good opportunity. It's a textbook continuation, potentially, that's coming. Structure's good. It's just a standard retest territory, in my opinion. People buy low, they distribute their profits, they rebuy back, and off it goes again. They say it's a very, very big, neat, juicy candle, but I think there's a lot of people, and leave a like if you agree with me, the PTSD of the fatigue, the market, the altcoin situation is hurting people because every single pump they're like, oh my god, it's just going to nuke itself. With that fear, that driving force around the psychology around it is going to hurt people more often than not. This is why you get massive, massive runs, because you get people that are getting liquidated on shorts because they're betting against the market when actually it will just follow through and go even higher. Now, I alluded to it just a little bit there. The entire market, in my honest opinion, the volume is low, like really low. Let's just whisper it. Okay, it's low. When we think about the entire market of 107 billion volume, now that's only on CoinMarketCap, but it's down 22% from yesterday. But the reality is here, there's no sign, in my opinion, of retail returning, like proper retail. The people that watch this video, you're the hardcore people. Let's be honest, you're probably a bit tapped in the head. Let's be honest. But the situation with a low volume environment, we tend to get sharp moves, both ways, by the way, not just one way. And this now is like probably the calm before the squeeze, because, as I said before, people are going to be betting against us. The PTSD is kicking in. Oh my god, we're just going to nuke back down to $84,000. We're going to, oh god, here we go. We're going to go down to 80,000, 76,000, whatever, 69. Whoa, it's going to get ugly. But often when people are doing high leverage and stupid leverage and they're betting against the market and they're thinking, because why not? They get hurt. And that's kind of the problem. So the liquidations will just ramp up randomly. We've had a short squeeze. The next one could be a long squeeze, because ultimately that's what's going to happen. This market will move based off leverage, and it always does. Don't over leverage, please. But also don't fade the strength neither. Now, this is a little bit overlooked. I talk about it on my videos and people kind of make some sort of reference to it, but the macro levels currently, right now, as of the last couple of days, are starting to flip a little bit more bullish. The S&P 500 is becoming a bit more stable. You can see on the screen here, the dollar has dropped significantly, by the way. The VIX as well is also starting to slowly stabilize. Okay. And as I alluded to it, the S&P 500, you could argue is starting to stabilize a little bit more in a way that is starting to range, give or take, and not basically be in an absolute death spiral. That is textbook, in my opinion, risk on, and crypto favors that, obviously. The Russell 2000 yesterday also printed a nice little candle. There's little bits and pieces happening, which is important. But the dollar could push down to 95. If it does push down to 95 and even lower than that, potentially, we could be looking at a really interesting situation in the market. I know it's a bit wishy-washy and a bit messy currently, my chart, but we could be looking a bit lower here. We could go for a retest and then drop even lower into these levels down here, as I said, around 95, which wouldn't be a bad thing, let's be honest here. But when you combine that with altcoins, you still have to be selective. Sorry, it's not a full-blown alt season yet. We're nowhere near. Bitcoin's done well. Altcoins have also pushed, but the dominant chart is still printing highs. That is ridiculous, by the way. Just going to put that point out there. So yeah, we've seen some big levels here on certain stuff. Sui's done well, Solana's done well, a couple of others have done well. I'm still looking at altcoins as trades. But for me, there's certain things that are just not happening right now. The flow isn't all into altcoins, and that is a little bit of a worry in my viewpoint. You know this. Now, again, I talked about in yesterday's video, we've got to look at the stable currency dominance. We need this to nuke. It needs to drop down to those 5-4% levels, in my opinion. Don't rotate too early, because if you get this wrong, you are cream crackered. You are, because ultimately the total 3/BTC is making a new low right now. What? Why? Even though when you look at the last few days, everything's popped off. Some of your altcoins have probably done well, and you're probably thinking, why did I listen and look at Mobster's channel and think we're not going to? What's the point of buying altcoins? Well, reality is the data is showing us that actually you're no better off yet. There still has to be a situation where you need to look for those strong trends, the clear levels. Don't just ape in. You need to see Bitcoin lead first and then relax. But that relaxation zone might be coming soon, because as I said before, Bitcoin is doing something quite nice. It is pulling back very nicely. With the altcoins, and as I've said before, if you've been watching my channel, I am waiting for certain levels to come in. We have pulled up. We are going to pull back. The entry points are coming up very, very soon, where we could be going much, much higher. This is a perfect bullish play. However, we need everyone to stay on board. We need everyone not to lose their shit, because ultimately, if people FOMO in with high leverage and they get squeezed out in the wrong position, it's going to cascade the wrong way. More often than not, though, I think people are going short just because of the PTSD. And let's be honest here, because they can. So yeah, I'm watching those levels pretty closely. I think there's a really good higher low zone appearing, and if we do bounce when we're loading up, let's be honest, I'm going to be going long on a lot of stuff. Link below to Blowfin, by the way. You get 20% fees back, so you get paid to trade, basically. It's pretty awesome. But we will reassess it. In my opinion, it's still bullish. Don't overthink it. Let me know, as I said before at the start of the video, are you buying the dip? Are you trading this? Or are you waiting for the overall bigger confirmations? And like this video if it's giving you some clarity. Please.